I'm excited and honored to be here with each and every one of you. I'm here to help you discover simple ways to increase your Forex profit potential now. Specifically today, we're going to be discussing what is called the London Breakout strategy. Now, we're going to show you how you can utilize trade setups during the European session, and I'm going to show you today how you can actually mimic the trading plans by professional Forex experts. Actually look over the shoulder of a live professional analyst. Actually trade live with them during what are called our live market Forex trading session. I'm going to explain that here in just a moment. Before we begin, I apologize if I go a little bit fast. We have a lot to cover. Quick housekeeping item. As well, everybody know that trading does have its own form of risk involved. And you should never invest money that you cannot personally afford to lose. And you should always trade with proper equity management in mind. Now, there is no such thing as an undefeated season with trading, and you may incur losses from time to time, but the key is to keep your profits high and to have minimal losses as you're going along. Now, it is also highly recommended you go through this complete education in its entirety, and you begin trading this strategy as an educated and knowledgeable trader. Also, please be advised that anything I'm going to share with you here today, I am actually going to teach you a trading strategy, but do not take this as investment advice, because ultimately, when it does come time for you to trade live, that decision to make a specific trade, well, that is yours and yours alone. Now, to quickly put a face to the voice you're hearing here, once again, my name is William Gallagher. I am one of the financial analysts here at Market Traders Institute. I have been involved in trading in the investment market since 1998, mostly in the stock market. Actually, recently, the last couple years, I've gotten into the Forex. Now, I also work for several financial companies and firms. I've launched a financial company from the ground floor up. More importantly, though, I'm actually a student of Market Traders Institute. I've actually was a student. They actually asked me to come on and start doing these presentations. So I actually have gone through Market Traders education. In fact, one of the things I do want to point out is that even though I did know about the Forex market, I didn't understand the potential of the Forex until going through this education. So I was once in a webinar, just like you are here today. I was wondering, well, if this is something that I can do. Well, if you say this is something that you can do, well, we here at Market Traders Institute, we are here to teach you. We can take you by the hand and step-by-step teach you how to trade the market. Now, quickly explain to you who Market Traders Institute is. We are an actual training institute. We are not a broker, nor are we affiliated with a broker. We are an actual education institute. You can see our building right on your screen right here. This is our building, and we are located in Lake Mary, Florida. That is about 20 minutes north of Orlando, Florida, about 40 minutes north of Walt Disney World. Give you a perspective of where we are. And you actually can come to our building. You actually can come to our building and get trained live in person. So if you wanted to do that, we can teach you. We can do that as well. So we were founded actually 21 years ago. We actually just celebrated our 21st anniversary last month. And over the last 21 years, we've actually trained over 30,000 students around the world. We operate under a single mission here. That is to create successful traders through the empowerment of education. Now, we have a little known fact here, a little known thing about Market Traders Institute is that we have an internal goal that by the end of 2015, we're looking to change the lives of an additional 30,000 students. We'd love for you to enroll in our program. We'd love for you to become another one of our success stories. So we're here to provide education. We're here to provide tools, training, and support. Everything in our belief necessary to be successful in this market. And we're not just simply here just to drop something on you and just send you on your way. We're actually here to support you. If you look at the type of support we've invested into our students last year, almost 90,000 hours of support time. That support cost us almost $2.5 million. 2015, we're looking to invest about almost 100,000 hours. That supports that cost us a little over $3 million. I know some of you might be saying, well, William, that's all great and everything, but what does that all mean? Well, we recently conducted a survey. We conduct a survey every quarter, much like a lot of brokers do. We found out that on average, our students are about 85% more likely to profit than the average trader. So it's nice to see the results of our reinvestment, our education, our tools, training, support, how that affects our students, and the results that our students are able to achieve. So just put a little perspective here on the credibility of our education and training here. Now, not only does MTI have some of the best strategies, we also have some of the best expert Forex instructors and analysts in the Forex industry. One of those specific instructors I want to go ahead and mention right now, his name is Joshua Martinez. Many of you may have heard of him before. He's one of our Forex masterminds here. He is known around the world as FX Pathfinder. Now, Joshua Martinez, he is one of MTI's product experts here, product knowledge experts, and he has trained thousands of Forex investors around the world. During initial investment deposit of $500, generated $39,000 of profit from it. He's made thousands and thousands of Forex investments. He's a published author, international speaker, professional analyst, and he is a full-time trader. Now, you might be wondering, well, why am I telling you all this? Well, he is the one who created the strategy I'm going to be sharing with you here today. Now, this strategy, it has allowed him to do some unbelievable things. In fact, let me go ahead and pull up his track record here. Let me show you here. This is actually his actual trading account. You see here in June of 2011, he opened up his trading account with $500 US. What this is gave him the ability to trade with what we call a micro lot position. So when he first started trading, probably like many of you, maybe he was making $2 or $3 here, losing $2 or $3 here and there. Win a little bit, losing a little bit, but then he started going through Market Traders Institute's education. He started noticing some patterns in this market. So if we were to go ahead and we were to fast forward his account, taking into consideration time compounding and building residual income that he learned while going through this course, he was able to start putting more money in, and he was able to build up his trading account as he was going along. So he stuck with this. That's one of the biggest things a lot of traders do, is that they don't stick through that time period, but he stick with it. Market Traders Institute taught him how to reinvest, how to compound and build residual income. And as he was going along, he was able to deposit more money as he was going along. Sometimes he was able to generate daily returns of $4,000, $7,500. In fact, he actually had one time, that the same strategy I'm going to show you here today, he was able to make $10,000 in one day, and actually 30 minutes using the same strategy that I'm going to show you here today. Now, he was going along. He was withdrawing $10,000 at a time. So this was once taking him 6 months of working 5 days a week to make. He was now doing it in one single day. Now, he also personally told me that when he was able to start withdrawing this kind of money, it dramatically changed his financial lifestyle for the better. So let me go ahead, before we jump into the strategy here, let me go ahead and let me show you his track record here. And it is third-party verified. He's up over 4,548% in his trading account from that initial deposit investment. And if you look at the bottom of the screen right here, you can see here, as I mentioned, he was winning some, he was losing some, winning some, losing some. In fact, if you were to pull up my account as well, you would see mine was the same. I was winning some, losing some as I was going along until right here. I think everyone can see right here, all of a sudden things start taking off. This is what we refer to as a tipping point. In fact, I had my own personal tipping point as well going through this education. In fact, I'm going to show you the same strategy here today that has been able to assist Josh in finding this tipping point, and hopefully it's going to help assist you in finding your tipping point faster. So I don't have too much time here today. Let me go ahead and explain to you before we jump into live market that I'm going to be showing you what is called the London Breakout strategy. This is only one of the strategies you can actually learn live in what is called our Live Market Forex Mentorship and Empowerment Program. I'm going to show you here in just a moment how you can actually get into this program here in just a moment. I will go over the details of this program, but the key point about this program is that I'm going to teach you the strategy here today, but you can actually learn this and actually trade it live in these live trading sessions here with these two professional analysts you see on screen. And also to give you some perspective here, to build some proper expectations here, so you're not thinking, well, is there some sort of catch here? Is this going to cost me $1,000, $5,000, $10,000? What I'm showing you here today, the London Breakout strategy for your first 30 days, it's only going to cost you, the Live Market Forex Mentorship Program, it's only going to cost you $27 for the first 30 days to join this trading club, less than $1 a day. So it takes some of the pressure off, knowing that this is very affordable, probably less than what's going to cost you to go out to eat one day. Maybe even going to see a movie. Less than that, you're learning a new skill set. And not only that, we provide you with a full money back guarantee. So if that isn't worth the investment right there to pay $27, less than $1 a day to learn how to trade live with professional analysts, we give you a full money back guarantee, meaning even if you do see the massive value in what I'm showing you here today, no worries, you even get your full money back guarantee with that as well. So without wasting any more time, what I want to do is I'm going to go into the live market. I want to go over the live market. I'm going to go over the London Breakout strategy with you. But before we do, let me go ahead and explain to you that those of you that do enroll into our trading club here today, the next live market analysis session, it's coming up actually on Monday. So once again, very affordable, and you can actually get into this trading program starting on Monday. Now, I know many of you might be brand new to the Forex market. Let me just go ahead. Let me just quickly get you up to speed. Let me explain to you what the Forex market is, and then we'll go into that strategy. The Forex market is the largest financial market with almost limitless amounts of liquidity. What this means is that is a market of limitless financial opportunity. It's a very large market. There's over $5 trillion daily traded in this market. So what that means is that there's a ton of potential in this market for people just like you and me who are looking to generate a source of income from it. Now, here's a key point to this London strategy right now. It's also a very flexible market. There are 3 trading sessions that go on daily in the Forex market. There's the Asian trading session, the London, the European session, and there is the New York, the United States session. These sessions overlap. So what that means is that this market is actually able to be traded 24 hours a day, 5 days a week. And it's this overlap in this market that helps us take advantage of this London breakout strategy. Now, another neat thing about the market is that the Forex is that it allows you to focus. Unlike other markets, like the stock market, there are thousands and thousands of stocks you can watch and trade. In the Forex, there's only about 60 different currency pairs to trade and focus on. The neat thing about the strategy I'm about to show you right now is that I'm going to show you which 6 currency pairs to pay the most attention to, and with this London breakout strategy, I'm actually going to teach you the secrets to trading them. So once again, we don't have much time here. So what I want to do is I'm going to go ahead into the live market right now. I want to go ahead, I want to bring all this together for you. Now let me quickly explain to you how the Forex market works. In fact, the software you see on your screen right here, this is called our Ultimate Charting software. We provide our students this Ultimate Charting software. It's actually very revolutionary. We actually have what's called a auto Fibonacci tool with it. Very nice. I unfortunately don't have a lot of time to go over it with you, but let me quickly explain to you what we do in this market. This chart here is called a candlestick chart. These candlesticks, they represent what the market has done in whatever time frame you select. So in this case right here, this currency pair I pulled up, this is the Great British Pound Australian Dollar, and it is on a daily time frame. What that means is that each one of these candlesticks represents what the market has done in 1 day of time frame. You have these white candlesticks. They are called bullish candlesticks. What that means is that the market went up and ultimately closed up during that daily time frame. You have dark blue candlesticks. They are called bearish candlesticks. What that means is that the market went down and closed down during that daily time frame. Now these candlesticks are formed what are called candlestick formations. Excuse me. These candlestick formations are considered the sign language of the market. They tell the trader a story. And I'm not going to go over these here today, but when you enroll into our live trading club program, our analysts, they're going to point out these candlestick formations for you so you can trade around them. And if everybody can see right here, this candlestick formation is called an engulfing bullish candlestick, another engulfing bullish candlestick, a morning star candlestick formation, a piercing line. Each time the market pulled back, formed this candlestick formation, you can see here the market U-turned. Pull back, U-turned. Pulled back, U-turn, pull back, U-turn. So we'll teach you how to identify these candlestick formations. And like I said, in our live trading sessions, our professional analysts, they're going to point these out and show you how to trade around them as well. Now, we also teach our students how to trade using what are called trendline breaks. This is another neat feature showing you here that each time when the market breaks this counter trend line, pulls back, breaks that counter trend line, rallies up. Pulls back, rallies up, pulls back, rallies up, pulls back, rallies up. Our professional analysts, they're going to show you how we can utilize these counter trend lines as well. Now, this market moves in waves. You see here these large waves right here. We're going to teach you how to trade around these wave movements because as a Forex trader, our goal is either to buy low and sell high, and sell high, or sell high and buy low. So I know some of you might be wondering, well, can you actually short the Forex market? Absolutely. We can teach you how to make money in this market when it's going up and when it is going down. So before we actually jump into the strategy here, let me explain to you actually what we are trying to do in this market. What we're trying to do is capture what are called PIPs, P-I-P, PIP. It is an acronym. It stands for price, interest, points. So let me quickly break this down and explain this to you in the simplest of terms of how this works. Now, just as there are 100 pennies in one US dollar, everybody understand that? There's 100 pennies in a US dollar. What that means is that one penny, that equals 1/100th of a dollar. Just like that. In fact, if you look at the right-hand side of your screen, the price action of this chart, the penny, it is represented by that second decimal point right there. The 94, there's 94 cents right there. That's the penny. Now, if you can imagine we're looking for a unit of measure that is smaller than a penny. That unit of measure would be the equivalent to a pip. Now, there are 100 pips in one penny. So just as there are 100 pennies in a US dollar, there are 100 pips in a penny. So what that means is that one pip, it represents 1/100th of a penny. Make sure I type this out. I always get this wrong. There we go. So the pips are represented by the fourth decimal place. So in this case right here, you have 55 pips right there, showing you right there, the fourth decimal point right there. So once again, a quick overview of how the Forex market works. And once again, this is just a very simple strategy. Unfortunately, I don't have a lot of time to explain to you all this in detail, but when you actually get into the live trading sessions, our professional analysts will go over all of this in detail with you. So what I'm going to do right now is let me go ahead and pull up these 6 currency pairs right now. These right here, these are the 6 currency pairs we're going to be focusing on for the London breakout strategy. Now, you might want to do a screenshot on this. In the upper right-hand corner of your screen, of your GoToWebinar screen, there might be a camera, or you might want to go ahead and write these down. These are the Great British Pound Australian Dollar. And if you see right here, they are all on a 1-hour time frame. What that means is that each one of these candlesticks represents 1 hour of time frame. So let me quickly explain to you. This is the British Pound Australian Dollar, the Aussie, the British Pound New Zealand Dollar, the Kiwi, the British Pound, the Swiss franc, the British Pound Canadian Dollar, the British Pound Japanese Yen, and the British Pound US Dollar. And right out of the gate, probably most of you can already see they are all based off of the British Pound. The primary currency is the British Pound on these. I'm going to explain to you why we're using this in this the London breakout strategy. So once again, these are the 6 currency pairs. You might want to do a screenshot or write them down. They are all done on a 1-hour time frame. So let me quickly come in here, and I'm going to pull up the British Pound US Dollar 1-hour time frame, and we're going to go back about a month. We're going to go back about a month, and I'm going to show you what this has actually done over the last month, show you how to use the strategy, and I'll bring you up to speed and bring you to the live market, show you what it's done over the last month. But let me quickly explain to you what we're going to be doing during this London breakout strategy. Now, what we're going to be looking for in this market between 2 o'clock a.m. Eastern Time and 5 o'clock a.m. Eastern Time, we're going to be looking for the market to form either its high or its low for the morning. The reason for this is because the London session starts at 2 a.m. The Asian session is wrapping up. So what's happening here is you have the tail end of the Asian session overlapping with the London session. So between 2 a.m. and 5 a.m., we're looking for the market to form either its high or low for the morning, and then we're looking for the market to either rally up and form its opposite high for the morning, or we're looking for it to form its pull back and form its opposite low for the morning. So we're looking for the market to form its opposite high or low for the morning. Whoops. We're looking for that to happen. We're looking for that to happen between 8 o'clock a.m. Eastern Time and 2 o'clock p.m. Eastern Time. The reason for this is because you have the overlap from the European session and the U.S. session here, the New York session here. So once again, we're using these 2 boundaries here to form either a low or high for the morning or a high or low later on in the day. Now, we've also found that these 6 currency pairs, they have what's called an average daily trading range. The average daily trading range is usually a minimum of 50 pips. And it's usually between 50 pips and sometimes over 200 pips per day. What that simply means is that we expect this market, when it forms either it's high, say it forms it's low for the morning, we're looking for this market to have directional movement of at least 50 pips in one direction or the other. So once again, we're looking between 2 a.m. and 5 a.m. for the market to form a lower high, and then we're looking for a minimum of directional movement here. In fact, let me circle that for you here. We're looking for a minimum of 50 pips. So the strategy I'm showing you here today, I'm going to show you the strategy how you can actually start taking advantage of it starting tomorrow night. We're going after 50 pips per day per currency pair of those fixed currency pairs. So very simple strategy, going after a minimum of 50 pips. You can actually go after more. In the live sessions, our traders, they can show you how to go after more when we're going after this. But let me just quickly explain to you the type of returns you can expect to make. Now, we have what are called micro lots. We have what's called a micro lot. With a micro lot, that is what's called a $20 investment per position. And each pip would be worth 10 cents. Let me type that out, 10 cents, just like that. So if the market moves 50 pips, that means you generated $5 in profit off that movement. Very simple strategy. Oops, you saw that there. So let me go ahead and quickly here, let me type out what's called a mini lot account. We have what are called mini lots. A mini lot, that is a $200 investment per trade, and each pip is now worth $1. And if we were to go after 50 pips, each one would then be worth, each 50 pip movement would be worth $50 in profit, just like that. And then we have what are called standard lots. Now, a standard lot, that is the standard by which most traders strive to achieve. A standard lot is about a $2,000 investment per trade. With a standard lot, each pip is worth $10. So if we were going after 50 pips minimum times $10, now you're looking at $500 of profit per currency pair per day. Now, the reason I bring this up is you can see here, you can now determine what type of trader you are. With a micro lot, you're investing $20 per trade. You can see your type of returns. With a mini lot, you're investing $200 per trade. You're generating $50 of profit per 50 pip movement. Standard lot, it's a $2,000 investment. Once again, you can see where you are with this right here. So here's what we're going to do. Let me pull back the market now. I have, about another 20 minutes here. Let's just take the next 20 minutes. Let me show you how this actually works here. Jan, this is live. I'm actually going to start off here. Let me show you how this actually works. I'm going to start off going back a month ago. I'm going to go back to April 7th, show you the strategy, bring it to the actual live market, show you what the strategy has done here on the British pound US dollar over the last month. But what I want you to see right here is that we're looking for the market to form either its low or high between 2 a.m. and 5 a.m. each morning. So if you were to look right here, this is right here, that low point right there is at 4 o'clock a.m. Right there, the market, directional movement going up. Your next candle right here, that's probably between 2 and 5 a.m. Directional movement, the market pulls back. Your next 2 a.m. to 5 a.m., the market pulls back. Your next 2 to 5 a.m., the market goes up, pulls back, just like that. Now, I know some of you might be wondering, well, why is there this directional movement? Why are we looking for this? Well, what we're seeing right here is, like I said, we have the tail end of the Asian trading session and the beginning of the London session. Well, it's been said that during the London session, the European market, it is processing the largest bulk of the Forex transactions. So during this period, the banks are processing their orders. This provides a huge injection of volume into the market, and it provides this directional movement. So this is going to give us the ability to take advantage of this directional movement with what I'm showing you right now. This is called the London breakout strategy. So what I'm going to do right now is I'm going to go ahead in here. Let's zoom in here. And what we're going to do here, we're going to start here. Our strategy is going to be based off of the 3 o'clock a.m. Eastern time candle. We are going to be waiting for the close of the 3 a.m. candle. So this is, you can see right here, this is the 3 a.m. candle starting on April 8th. So we're going back about a month ago with the 3 a.m. candle on April 8th. Now, let me explain to you here, the London strategy is based around the close of the 3 a.m. candle. The neat thing about our trading club, when you actually get into our live trading sessions, Actually, you're going to be in the market starting at about 2 a.m. You're getting into the market at 2 a.m. The professional analysts, they're going to be looking and seeing where this market is going. They're going to help set these trade setups for you. So once again, I'm just showing you the strategy here today, but when you enroll to our trading club, our professional analysts are going to provide to you so much more. They're going to detailed analysis. They're actually going to set up these trades and then give you the opportunity for you to make that decision whether you want to take advantage of them. So let me quickly come in here. We've identified the close of the 3 a.m. candle, which is right there. And so we're basically going to be starting at 4 o'clock a.m. Just so I know some of you might be wondering and asking that. So here's what we're going to do. Our strategy, once we've identified the close of that 3 a.m. candle, we're going to come in here and we're going to set 2 pending orders. We're going to set an entry buy position. The entry buy position, it's going to be 10 pips above the high of that 3 a.m. candle. So here's our 3 a.m. candle. We're going to set an entry buy position. That's a pending order, 10 pips above that high. We're also going to set another pending order, an entry sell position, 5 pips below. So right there is going to be our entry sell. Once again, a pending order, and it's going to be minus 5 pips below the low of that 3 a.m. candle, just like that. Now, both of these are pending orders. We are not actually in this market until we actually trigger, whether the market goes up and triggers our entry buy or pulls back, triggers our entry sell. So let's go ahead, let's quickly see what happens here. And now I know some of you might be wondering, well, what is the probability? What is the probability of being successful with this strategy? Well, I'll bring this to live market. I'm going to show you here that with our yesterday morning sessions, we were 67% successful with our trade. So to give you some idea of how this actually works. So let's go ahead and let's see what happens here. So 1, 2. 2 hours later, the market does in fact rally up, breaks that entry buy pending order. That entry buy pending order, this now becomes a market buy position. This means that we are now in this market. We have now entered into this market, and we are buying into this market. Now, we're going to cancel the opposite order. We're going to cancel this opposite order now, which is the entry sell. Now, Tahir brings up a good question here. I didn't get a chance to explain this here. Tahir is saying, why is there a difference? Why is it 10 pips above and 5 pips below? The professional analysts, they will be able to explain this in much greater detail, but a general explanation is because when you are buying into this market, you have to take into consideration for the spread. So when we buy into the market, we're going to pad that with an extra 5 pips. So once again, to give you a little bit of an idea of explaining that, why that works. But like I said, when you go into live sessions, they'll actually they'll explain to you why that is. But so we entered into this market. We are now in a market buy. First order of business is we're going to cancel this opposite order, which is the opposite pending order, which is the entry sell. Now we're going to come in here and we're going to set a stop loss now. Now our stop loss is going to be set at the low of that 3 a.m. candle. So let me type that out. Stop loss. Oops, let me type that out. Stop. Let me type that here. So here goes stop loss, and this is when buying into the market. It's going to be a little bit different when we're selling the market. So when we're buying into the market, it's going to equal at, it's going to equal at the low of that 3 a.m. candle right there. So you might want to write this down. You might want to write this down. Stop loss when buying is at the low of that 3 a.m. candle. Now, as I mentioned, we're looking for this market. We're looking for directional market movement in this market of a minimum of 50 pips. So we are now going to come in here now. We're going to set our target at 50 pips. That's our minimum target of 50 pips. So let's come in here right about, what's that? Right about there. So 1.4964. So 1.4964. There is our target. So our target is going to equal plus 50 pips. Just getting on first base, going after, target going to equal plus 50 pips. We just want to get on first base, capture 50 pips per currency pair per day. It's a very simple strategy here. We have our market buy. We're in the market buying. We're going after 50 pips. We have our stop loss set at the low of that 3 a.m. candle. So let's go ahead and here, let's see what happens here. 1, 2, 3, 3 hours later, the market does in fact rally up, hits our target, hits our limit. We are now out of that position. Now, I know some of you might be wondering, well, do I have to sit in front of my charts and wait for it to hit there? No, you're setting this target in your broker's platform. So if you want to, you can come in here, set your trade, and then go back to sleep, go about your day, whatever you want to do. So once again, it's how you want to do this. So on that trade right there, we've captured 50 pips. Now 50 pips, to give you some perspective here on the amount of profit you just captured. With a mini lot trade, you just made $50 in about 3 hours. With a standard lot, you just made $500 in profit in 3 hours, just like that. So just like that, to give you some perspective here, one trade, 3 hours later, we're now up $500 in profit just off of that one here. So let me quickly show you here one or two more. We'll bring this to the live market. So we're now waiting for the next 3 a.m. candle, which is right there. Sorry about that. I've gone ahead to save some time here. I've gone ahead and labeled them. Let me clean up my charts right there. And we're now going to go ahead. We're now going to set this up. Now, once again, before this 3 a.m. candle, our professional analysts here, you're going to be in the market trading with them, analyzing the market for about an hour or two before you actually get to this point. So we now have identified the 3 a.m. candle, which I believe this is now on April 9th. There's the close of that 3 a.m. candle. We're going to come in now, and let's go ahead. Let's set our entry buy position 10 pips above. So let's quickly come in here and let's see where it could be set at right about there. So there's our entry buy. Entry buy. And that's once again going to equal plus 10 pips above. Right there. There's our entry buy 10 pips above. And then our entry sell is going to be, 5 pips below the low of that candle. So we're coming in here right about there. Entry sell is going to equal minus 5 pips below. And I apologize for rushing through this. We don't have much time to go over all this. I want to go ahead and explain as much detail. But the thing is that in the actual live trading sessions, the professional analysts, they're going to be walking you through this. They'll explain this to you. They're going to be looking at the market, seeing where the market's going. So I'm just coming in here showing you the quick strategy. I promise you, when you actually get into trading sessions, they're going to teach you this in much greater detail. So we have our 2 pending orders. Once again, we're not in the market until we actually trigger one of these here. And Michael says here, is the bottom at the body or the wick? The low is the wick. So we're going to go 5 pips below the wick, same thing above as well. So to answer your question, Michael, so let's go ahead, let's see what happens here. Next hour, bam, the market does go ahead, breaks our entry sell position, and it turns that now into a market sell position right there, meaning that we are now shorting the market. First order of business is to come in here, cancel this opposite order. We're no longer looking to enter into the market buying. We are shorting the market right there. So market sell position, and here's a little bit different here. We're going to set our stop loss. The stop loss is going to go 5 pips above the high when selling here. So we're going to set that right about there. Now, once again, our stop when selling is going to equal plus 5 pips above the high. The reason for this is because when we are shorting the market, we are actually entering by selling. And once again, you don't have to take into consideration for the spread when selling, but when buying. If we were to buy to get out of this position, we have to buy out. So we have to go ahead and take into consideration for the spread. So when selling, 5 pips above, just like that. So we have our market sell position. We have our stop loss set above. We're going after a minimum of 50 pips. So 50 pips is right about there. So 1.4726. So 1.4726, that's our target. Our target is going to equal plus 50 pips. And once again, I apologize for rushing through this. I only have about another 10 minutes or so. I'm going to try to get you through one more trade opportunity here. So let's see what happens here. Let's go ahead. Let's see what happens here. So we have 1, 2, 3, the market's starting to go against us a little bit here until right there, bam. We have an engulfing bearish candlestick, sign language of the market that's saying, hey, you know what, William, this market's looking like it's going to U-turn, and then 1, 2, 3, bam. The market does, in fact, pull back, hits our target, and we just captured another 50 pips. Not too bad. That was another 50 pips in 1, 2, 3, 4, 5, 6, 7 hours. So 50 pips, that would equal another $50 for you mini lot traders, or $500 of profit for you standard lot traders in 7 hours. Not too bad. So not too bad. We've placed 2 trades so far, 2 days, going back about a month ago. Not too bad here. Now, once again, the other neat thing about this is that, okay, actually let me answer a question here. Okay, so what is the relevance of the 3M candle? John says, what's the relevance of the 3M candle? Once again, the London session opens at 2 a.m. We want to have that market start to open up, get it going a little bit here. So our professional analysts, they've been doing this for over a year. They've determined that the 3M candle is the best one to base this off of here. So once again, just want to go ahead and explain to you how this works here. Now, let me show you another strategy here, is that if we wanted to, they're just saying, well, hey, could we go after more here? Yeah, what you could do, if you want to go after more pips here, you could actually move your stop loss maybe up to the break-even point, or maybe even just a little bit less, and then you could even set a new target. Maybe you want to go after another 20 pips, and look at that here. Yeah, we could actually go after more, just like that. In fact, right there, we could have actually gone after maybe another 20 pips or so. But right here, we do have the next 3M candle. So let me quickly show you one more here. Let me show you one more. Let me show you one more quick trade here. Let me show you here. I give you a little bit more perspective here, what you can expect in the live trading sessions as well, especially with this one right here. So let me delete all this here. Now, one of the things I want to show everybody here is, can everybody see here how this market is going down? You see here, here's our 3M candle again, 3 a.m. on the 10th. The market's going down. Here's a situation here where in the live session here, the analysts are going to be analyzing the market. And they're going to see here, look at this. We have a trend line, and we're below that trend line. So with this trade right here, even before even placing our pending entry buy or entry sell positions, I think most of us would agree that with a little bit of analysis, we could probably have a good probability that this market looks like it's going down. So in the live session here, this is a situation where the professional analysts are saying, you know what? We're probably going to be looking to take a selling position right here. We're going to be looking to take a selling position right here. So let's just go ahead in here right now. We're just for simplicity's sake, let's just go ahead. We'll set our entry buy 10 pips above, right about there, and we're going to set our entry sell 5 pips below, just like that. So 5 pips below is right about there. Now, I'm not going to type these out, but once again, there's our entry buy 10 pips above. Entry sell is, is 5 pips below. So let's go ahead. Let's see what happens here. Bam. Next hour, the market does in fact now it enters us into a market sell position, meaning that we've just entered into this market. We are shorting the market as we somewhat have predicted. Based on a little bit of analysis here, you can see here the market did look like it was going down, so we probably would have predicted a market sell position right there. So let's just go ahead right now, and let's see here. We cancel the opposite order. We can cancel that opposite order, and we come in here. We're going to set our stop loss. Stop loss is going to go 5 pips above, so 1, 2, 3, 4, 5, right about there. And I apologize for rushing through. I'm running out of time here. And we're also going to set our first target. Our first target's going to be at our target's going to be at 50 pips. So right about we'll say right about there, 1.4614, 1.46. So right there. So there's our target. So target equals plus 50 pips, just like that. And okay, let's see what happens here. So 1, 2, 3. 3 hours later, the market does in fact hit our target, and then bam, we just capture another 50 pips. And for simplicity's sake here, 50 pips, that would equal $500 in profit, and that was in another 3 hours of trading. So hopefully you get a little bit of perspective here. Hopefully you understand how this strategy works here. I just showed you 3 trades. I unfortunately don't have a lot of time here. That was 3 trades. We're up 150 pips off of 3 trades. That would be $1,500 just off of those 3 trades. So let's go ahead, let's bring this quickly to the live market here. And let me just show you here. Let me clean all this up here. Let me just show you the next trades here. You can see here, the market here hit its low and it went up. Let me compress this here. Right here, the market pulled back. This probably may have been a losing trade, but the market did give us some directional movement right there. Here's our next one right there. The market did, in fact, go up. More directional movement. Let's see here. Directional movement. Just like that. The market here, let me just fast forward this here a little bit. Let me compress this for you and bring it to the live market. Okay, so we got directional movement, up, 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 down, down, and okay, right about there. So here's the live market. So you can see here, directional movement, directional, down, and this is the actual live market right here. So this is the trade. This was actually from yesterday morning right here. You can see right here, the market did in fact pull back, 91 pips. So there was directional movement on this trade right here on the pound US dollar, 91 pips of movement, not too bad. Now let me show you another one here. Let me show you here the pound Canadian dollar. There's our 3 AM candle. The market did in fact pull back 96 pips. And let me quickly show you one more here. This is the pound Swiss franc. There's our 3 AM candle, and we had 61 pips of directional movement right there. So once again, we won 4 out of these 6 trades here. So just off of yesterday morning's trades right there, we were successful of 67% of those trades here. But once again, what I showed you here, the London breakout strategy, this is just only one of these strategies you're going to learn. And in these strategies, in these live trading sessions here, you're going to be trained by these 2 professional traders here. Joshua Martinez, he has days like this, $8,800 in one day. Like I told you, he actually was able to generate $10,000 in one day using the same strategy I just showed you here. Christopher Pulver, another one of our analysts who's going to be in the live market teaching how to do this. He's one of our lead analysts, and he's one of our full-time traders here, but he also knows how to get results in the Forex. Let me just show you here some of our student results here. FX Caddy here, he says here, 1,637 pips this month. That was back in March. He says, thank you, Chris Pulver. He doubled his best previous month back in February. Brandon here says, thanks to you guys, specifically Chris Pulver. Let's see here, places first real money trade up 150 pips. Peter Cook here, I did Josh's pound Australian dollar to the limit. Just as Josh said, it was good for 80 pips. Samson right here, look at these British pound here, these different trades here. He says, here's my trades from today, thanks MTI, 328 pips. Jason Stewart here, another success story. He just had his first $10,000 single trade, $11,000 in profit right there. He says, thanks FX Pathfinder. That's Joshua Martinez right there. Let me show you some of our recent trading sessions here. In this trading session, we captured 427 pips. In one of the live trading sessions, I'm going to show you how to get in here in just a moment. March 17th, 99 pips. In February 17th, our students averaged 50 pips for that trading session. Some got 88, 77. A more recent one here. Chris Pulver reported from the April 7th trading session. He said our results thus far, students made anywhere from 120 pips to 400 pips. And you see here in our trading account, we were up 224. So once again, this is part of our live market mentorship program. I only have about 3 minutes here to explain this, but when you enroll into the program, you're going to get live trading sessions each week. You get to trade live with these 2 professionals here. And as a special bonus, you're also going to get 30 days of access, unlimited access to our analyst on-demand room. So without any further ado here, let me explain to you here that normally here, to get trained live by our professional analysts here, to look over their shoulder, get one-on-one training, sometimes it would cost $1,000. Some of our analysts charge $5,000. FX Chief here, he charges $10,000 to get one-on-one training in live trading sessions. As part of our live market Forex mentorship program, you actually get enrolled today for only $27 for the first 30 days. Money back guarantee. I'm going to go ahead right now. I'm going to send the link out to everybody here in the room right now. Go ahead, click on the link. If you just go ahead, click on that link here, and when you click on the link, it's going to show you exactly what I just showed you right here. I'm going to go over here, quickly explain to you everything you're going to receive. You're going to get the live market mentorship, live trading sessions. The next live trading session is going to be on this Monday. So you enroll today, you actually get to trade, get into one of these live analysis sessions on Monday. And you're going to get 30 days of free access, VIP Analyst on Demand access. All of this here, you can go look over the details here, but all of this is worth $5,400. We're giving it to you today as an introductory special for $27. We're going to save you 90% off the cost of this trading club.